I was making a good money and doing well, but somehow I have a continual losses and now my account is blow up. Why has this happened, man? It is because you missed one of these three stages of trading cycle. Welcome to the formula trade. I believe most of you have experienced this up and down cycle. You would promise yourself that you will be more careful and beware this and that, but you're still repeating the same mistake. Here I share to you the three stages of the trading cycle. Every stage is equally important that you can't just focus more on one of it. First is pre-execution, second is execution, third is post-execution. It looks like a very simple cycle that everyone will go through. What is so special about it? Okay, the devil is in the detail. Let's go through one by one. First, pre-execution. So what do we do on this stage? Basically, I have covered part of this topic previously, which is top 5 things you need to understand before you start trading. If you haven't watched that video, please stop right here and watch it first. And once you are done, you can proceed with this video. So now I guess you are ready with your gun and bullet for the war, right? And I'm sure you definitely want to win the war. But we won't be winning the war by luck. There must be a plan and strategy to win the war. This stage 1 is important and is most time consuming among the 3 stages of the trading cycle. We are also like a fisherman. We wait most of the time just for the best moment to capture a big fish. We don't have to fear of missing out because missing out is part of the game. We have more opportunity out there. So at stage 1, preparation and analysis taking a big part of it. Before we go to the war, we need to budget our bullet, grenade, and fully utilize it. Nothing can be wasted. Else we would just get killed for no good reason. In financial world or trading world, we call it as a money management. We are dealing with money, so we also want to make money from the market. Definitely money management is the most important part of it. A person with good money management with average technical analysis skill will be doing better than the another one with just good technical analysis skill but poor money management. So to do well, you will need to control the number of trade size, leverage level, and cash available versus the total allocated ratio. In decent unit trust world, the fund manager will utilize up to 90% of the total fund and diversify it to multiple company or sector and only left 10% as a reserve cash. And the maximum exposure in a single company is just 5% from the total fund. We take this as a guideline, but we have to make some adjustment due to what we are trading is having some leverage level. For example, if we have leverage times 10 on the instrument, then we should have reserved 10 times more cash as a backup to avoid hitting the margin call. Or we can reduce the trade size by 10 so it won't hit your stop loss too. It is an art of mix and match with your trade size and the leverage. So the ultimate goal is to avoid overtraded. A lot of people asking what is overtrade. So how to define it? Okay, make it very simple. If you are being very anxious on what you are holding now, you can't leave your sign on your screen for 10 minutes, then you are overtraded. Okay, next thing is knowing when to take profit and cut loss are part of the money management too. This is a big topic to cover, but in short, any profit is better than losses, so just be grateful on it and take it. If you're already holding a profit trade and you are not certain on how far it can go, just take the profit and don't regret on your decision. Don't worry, there are plenty more opportunity out there. For cut loss, just set a comfortable amount that you can afford to lose. If you are holding a losing trade and you are not sure the trend will turn into your favor, you probably should set the take profit point at the maximum possible point of the current rebound. That means not every trade should only close with profit, but sometimes you have to cut loss to avoid further losses. You have to believe that you have made a right decision, not until you miss the best cut loss point and you would force to cut loss at a much higher losses. Alright, now you are really ready for the war and time to find the opportunity to get in and make a fortune. Before that, you have to check on the market situation now to find opportunity. So what is? So this is a few questions you should ask yourself and check on the situation. Is the market choppy now? Is the market having any upcoming news that will heavily impact the trend? Do you see any trend? And is the trend just started? Is the instrument raised or dropped by a lot on today? Is the market under consolidation or slowly building up the momentum? Are you an expert to trade on the current trend, or it seems like very uncertain for you? Once you check all these market conditions, you can jump in when you found the best opportunity. And also review each time frame from daily chart to minute chart, so you will get a rough idea on what is the trend now based on every time frame. Focus on the possibility of uptrend and downtrend, but not on the price of the instrument. Somebody will think that the instrument already dropped by so much from the all-time high, it should have rebound now. But in fact, the trend is not determined by this logic. Next thing is, if you already holding one position of that instrument and having paper earning or paper loss, do not bring that emotion to your new trade. For example, the current holding of the instrument is losing money, and if you put in a new position, you are actually buying at the lower price. You will feel like you are taking advantage and you are getting a lower average price. But the instrument might continue falling and bring you more losses, the double losses. So treat every single new order as new order. Do what we should do as we mentioned earlier on this stage 1. Okay, when everything is ready, we are entering the stage 2, execution. Okay, execution is including all these actions, which are place order, set stop loss, set take profit, and close order. All of these actions would not take you long time because you already have the plan before you entering this stage. You already have the price to go in, take profit point, and stop loss point. So one is set, it is kind of automatic, unless you want to take profit earlier or cut loss earlier as the situation change. But bear in mind, you should not move your stop loss, because once you move it and you get lucky this time, you will make it become your new habit. One day, you will not setting any stop loss anymore and let your account blow up just like that. By the way, one thing you can change is the take profit point. This is when you see a better opportunity and you can move your take profit point to higher. And now you can also shift your cut loss point to a positive value. By now, the worst thing that can happen to your position is making lesser profits, not losses. That is really peace in mind. Another tip is, never let the losses hurt you so badly. You can lose, but can't lose it all. Have to stay in the game. And you should never fall in love on an instrument. If you are at a wrong direction, then you have to cut loss. Wrong means wrong. You can't be loyal to it. Believe me, execution as the plan looks very simple, but this is the harder part of this 3-stage cycle. If you really happen to not setting any stop loss, then you have to make a real quick decision when the direction against you and seem persistent. Make the decision and take immediate action. The longer time you take to make a decision, the harder you make the decision and action. If you are a person cannot make real quick decision, do the trading at a higher time frame or lower down your leverage. This can buy you more time to make decision. Finally, you have closed the position. So now, either you close with profit or losses, you are entering stage 3, post-execution. This is the part that you have to review your result, no matter it is a profit or losing trade. Let's say you are making profit. There are few things you need to take note. Be extra careful and stick to the rules and stick to the plan. especially if you are making a good profit or multiple continuous profit trade. Your godlike feeling has built up. You will feel like everything becomes so easy. You can handle it very well. No matter how I trade, I can make profit. By having this feeling, I think you have much higher chance to screw up everything just by continue trading. So the solution for you is call it a day. This would keep your profit for the day and let your emotion calm down. This can avoid you making a killing mistake. If you would like to take another new trade, so back to stage 1 and follow the rules strictly. Okay, let's say you are making losses and you also have few things to take note. What you need to do is stop everything for a while and stay calm and rest. This is to avoid more wrong decision making. Your revenge mode has just turned on. It is very normal that people think the next trade will be a profit trade and covering the previous losses. Or maybe people will think to double up the trade size to make it profitable in overall. Believe me, a bad time always comes with another bad time. Many people make the same mistake and don't believe they would have a continuous losing trade till they lost everything. So, just stay away and take a break. You win some and you lose some. Important is income. There is always another day to make back the money. If you would like to take another new trade, back to stage 1 and follow the rules strictly also. Bear in mind, even if you have made multiple profit trades, the game never becomes easier. It is just as hard as every single one. Don't take it easy. The market never wrong, so you can't blame it. You have to understand it. Last, review your trade, why you have made money and why you have made losses before you back to stage 1. Remember these 3 stages of trading cycle that you can't miss one of it. Thanks for watching and don't forget to subscribe me. See you guys on next video. Bye bye.